Hello, my name's Ethan. If you are new here, make sure to check my website, ethanwrenn.com. From there, focus. You can find links to all my various socials. We are currently live on YouTube, Twitch, and the front page of my website. So if you want to get updated when I go live next, make sure to follow on Twitch, subscribe on YouTube, and all the other various platforms. Twitch, Reddit, Discord. I have an active Discord. I'm in there almost every day. It's the best way to get a hold of me. So make sure to join the Discord if you would like to talk stocks with a bunch of like-minded individuals. It's completely free and always will be free. Absolutely no downside. Make sure to check that out. So, what is the next symbol we're going to be covering? It's actually extremely similar to what we just covered with the Dow Jones. And why is that? Well, the next symbol we're going to be covering is UDOW, ProShares, UltraPro, Dow30. What is this? This is maybe for a more advanced trader. This is not you. Listen carefully before acting. This is a 3x leveraged ETF that correlates with the Dow Jones. We just covered the Dow Jones 5 seconds ago. There will be highlights available on Twitch and YouTube. Watch both videos. If you're seeing this one, you haven't seen the other one, go watch the other one, come back. So what this ETF does is it takes the performance of the Dow Jones and triples it, but that works both ways, right? So for example, this is a bad example. We've covered a lot of leveraged ETFs in the past. It's a great way to gain exposure on a particular investment that you might not have been able to gain otherwise. Let's say you have limited funds. You want to buy a lot of a particular asset that you are extremely confident in. This is an investment vehicle that would allow you to essentially get 3 times the amount of that investment that you have for capital. That means for every 1% that the Dow Jones goes up, this goes up 3%. Every 1% that the Dow Jones goes down, this goes down 3%. It works like that. Now, this comes at a cost. Over multiple years, you will not see an exact 3x performance because there's a small fee collected by ProShares and similar companies that offer these leveraged exchanges. This should not be surprising to you if you trade options. Options have a form of fees that you pay in exchange for that leverage. If you have a margin account, your brokerage charges you for leverage. Relative to those forms, I'd say this is probably the cheapest way to gain access to more capital on a particular investment. So keep that in mind. Now, if we are projecting a bullish run on the Dow Jones, as we are, we would only expect this one to go up. And guess what? It has. Over the past couple months, just from this past recent dip, this is up over 51%. Again, that would be roughly 3 times what the Dow Jones has clocked over the past couple of months. Now, some people say holding leveraged ETFs for long periods of time can be risky, but personally, I disagree. If you're a savvy investor and know how to time your entries and your exits right, hell, let's pretend you're not a savvy investor. Let's just zoom out on this chart a little bit. If you would have bought this ETF back in 2012, how much money would you have made? Well, from 2012 to the current price, you would be up 1,582%. From its all-time high, you would have been as much as 2,200% up. Quite clearly, holding a leveraged ETF that is a bullish correlation to its Dow Jones underlying for multiple years is not only not risky, but also maybe very smart. There are a couple leveraged ETFs out there that are really bad, like some UVIX variants or some of the SVXY. Like, those are awful. You do not want to be anywhere near those, not even for 5 minutes. Don't even look at them. But there are a couple leveraged ETFs out there in the waters that are absolutely amazing. For example, UDOW. Another one is UPRO. Another one is SP. Damn. There's other ones. Make sure to check out my YouTube channel because I've definitely covered some of them. I don't want to say any wrong symbols now, like maybe say the wrong, because there's also inverse variance that can also allow you to get some unique trade strategies off, especially on limited account types. Like let's say you have Robinhood and you don't have access to options, or you don't have access to shorting, because you can't short on Robinhood. You only either have raw shares that you can buy, or you have options, which fuck options. Just do raw shares, right? You know, raw shares is where it's at. I like shorting, but Robinhood will not let you do that. You have to use like maybe Webull or Interactive Brokers for trades such as that, but you can also use some of these inverse leveraged ETFs to get a similar effect. But that being said, right now we're currently talking about UDOW. Where are we expecting UDOW to go in the long term? Well, right now we are currently projecting as much as 197% gain. That would put the price point for this particular asset at $122.97. As you can see over here, they seem to think it's a buy. I'm telling you it's a buy. But when you're trading on these leveraged ETFs, as you can see, I do have technicals in place, but I haven't talked about them much. And I'm a big technicals guy. So why am I not talking about them much? Well, when you are trading leveraged ETFs, you want to do all of your technical analysis on the underlying. So as I just said, we literally just covered the Dow Jones 5 seconds before covering this symbol. If you have not seen it, go watch that and come back to this video. You want to do all of your technical analysis, research, underlyings for that symbol. Once you have identified the time and the price point that you want to be entering your trade at, or setting your order at, you know, you can do a limit order, you know, set limit orders at the price point you like, you know, create that floor for everyone, right? That everyone appreciates that. Or if you just want to show up and submit that market buy, drive that price, that's cool too. But you want to be doing all of that research with the underlying that your leveraged ETF represents, then placing your trade in the leveraged ETF and riding the leveraged ETF as long as the underlying trade that you originally planned for is going as expected, right? You know, you plan your trades, You plan your entries, you plan your exits, you plan your, oh shit, things are not going how you expected moments, all of that, and you stick to your plans. You don't get emotional. You don't wake up in the morning and see a headline like, oh, payroll, I'm panicking, and then just nuke your portfolio, get out of position, it starts running without you, and then you have to buy back at a higher price. Like, you got to stick to your convictions, plan your trades, execute them accordingly. Do not get emotional. These things fluctuate a lot, especially if you're trading in a leverage ETF. This is more for a more advanced trader. We are stating that clearly. This ETF does offer a dividend of 0.76%. Just a little icing on the cake. It takes a fee from you for offering the leverage, but then it also gives you a dividend. And again, this is definitely a more safe leverage ETF to hold. This is one I actually feel comfortable recommending, unlike other ETFs. And let's quickly just go over previous runs, because we did this with the Dow. So you're saying, wow, you expect it to run 200%? That's crazy. Is it though? The last time the RSI was as low as it was currently was back in March 2022. What happened after that? The RSI bottomed out. It proceeded to run for roughly a year to a year and a half. And in that time, it gained 476%. Massive. The time before that the RSI was as low as it was then would have been right here, December 2018. What happened there? It proceeded to run for roughly a year and 2 months, and in that time, it gained 123% in 1 year. That's amazing. The time before that, the RSI was as low as it is currently, would have been January 2016. What happened then? Proceeded to run for exactly 2 years. You're starting to see a little common time frames here between all these symbols we're covering today. What happened then? It ran 391%. For more advanced traders who are aware of all these different leveraged variants, some might treat these leveraged variants as the real game and the underlyings as the talking points. Well, food for thought. Well, different way of thinking about these assets that we cover. There's a lot of different varieties of leveraged assets. Look through them, figure out which ones are showing growth over time. Avoid the ones that are showing decay over time, because those definitely exist, as we mentioned, and you can plan some very unique and interesting and lucrative trades out of them. Let's move into our next symbol.